Well, I guess you guys don't have to worry about seeing any more million-dollar properties, at least until I get to California. Although there are some pretty expensive neighborhoods here in Illinois. I was pretty shocked, I was looking at neighborhoods, where am I going to film today? And this is a pretty normal, average neighborhood here in Champaign, Illinois. But let me tell you guys, I saw houses that were well over $1 million in different neighborhoods here. I even saw one that was over $2 million. So I don't know where these people think they live, but they want $2 million for some of these houses. But this seems like a more average, low-key neighborhood, kind of like we walked through in Louisville. It's a great place to talk about how much extra money homeowners are spending every year on maintaining their home. And this is something that I have warned new home buyers against time and time again, because they just don't seem to get it until they go through it themselves. And apparently the new data is in, and homeowners are shelling out about $20,000 a year in addition to their house payment. We're talking about all the extra costs involved just to be a homeowner, guys. An extra $20,000 a year is if like you're buying a new car every year, not a brand new car, but a used car. And there's so many expenses that are related to buying homes that people just don't realize, okay? The average American is spending about $18,000 per year to maintain their house. And that's just for a regular single family home, just like we're looking at right here. We're not talking about anything special. We're not talking about a big mansion, nothing like that. Not high cost of living areas like Florida, New York, and California. Just an average house like this. They're saying that this figure is up 26% over what it was 4 years ago. So surprise, surprise, inflation is also killing the homeowner when it comes to just maintaining their house. And of course, these hidden costs are things like property taxes, homeowners insurance, home maintenance costs, as well as energy, internet, and cable bills. So it's the whole shebang. It's just keeping your household up and running is what this extra 18 to 20 grand a year is referring to. You can also refer to these costs as phantom costs. Ramit Sethi, he refers to these costs as phantom costs, because that's exactly what they are. They're not things that people anticipate paying until they actually buy the house and they find out the hard way that, wow, all this extra stuff costs a lot of extra money, a lot more than I really thought it would be. And the biggest problem with these expenses, guys, is not just the fact that it is expensive, but it's the fact that people do not anticipate it when they buy the house. People just think, well, I'm gonna buy the house and then, we'll just take it day by day and see how it goes and what comes up, and we'll worry about it then. But these expenses add up. Here we have a house for sale for $350,000, and it's not quite a flip, but they bought it back in 2019 for $250,000, and now 5 years later they're trying to sell it for $350,000. And I actually think they have a pretty good shot at getting it, because here's why. First, let's look at the property taxes. Illinois is one of the highest property tax states, and this house is $6,700 a year just for that. But the market here is still extremely low inventory. Only 13 houses on the market for sale here, whereas pre-pandemic it would be around 70. And the home appreciation in this area is still about 9.2% year over year, but still, the home prices are extremely affordable here at roughly $150,000 for the median home price. And when you combine extreme affordability like this, combined with extremely low inventory, these are the areas that you're going to see prices continue to go up for, and of course are in the Midwest, which is one of those areas. And one of the biggest contributors to this, surprise, surprise, has been homeowners insurance all across the country, particularly Florida where I live. It has become a massive expense for so many people, and it's one of the reasons you're seeing so many people sell, because they just can't afford this stuff anymore. If you think it's just Florida, it's not, because in 2023, 75% of homeowners across the country saw an insurance hike with their homeowners insurance, okay? And 1/3 said that their premiums increased between 5 and 10%. And a recent survey that came out from Value Penguin that was done in February of 2024, they're saying that 1/3 of policyholders that are paying homeowners insurance are struggling to afford their premiums this year, guys. And that is just one of the phantom costs of being a homeowner. And once again, I want to make sure people realize that I am not trying to talk you out of buying a home. If you have your heart set on buying a house, you know the neighborhood, you know you're going to get a good deal, you know you can afford the house, by all means, knock yourself out. I am not telling people not to do it, What I am doing is giving people a heads up of what they're getting themselves into if they do it. That's it. That's all I'm doing here. But you have to understand that just the mortgage payment alone these days, a lot of times, is more than what you're going to pay in rent in the local area. And then when you throw on all these extra phantom costs, you could easily be paying double to own your house right now versus renting a similar house. And here's the problem, guys. Inflation is crushing everybody right now, but particularly homeowners, because we have higher inflation. This also leads to higher insurance premiums because the replacement cost of the house has gone up. The labor costs for repairs has gone up, so insurance premiums go up along with it. And then property taxes go up because the valuations on all these houses have risen so high. So inflation is just robbing you every which way possible right now, but especially if you're a homeowner. Because the thing is, when you're a homeowner, there's not much of a limitation on how much all these things can go up by. Like, yeah, your property taxes can be limited by a homestead exemption of how much the percentage can go up by each year, and insurance companies have to ask the local governments for permission to raise rates, but usually the answer is yes. And you could basically say that there's almost no limit to how much these phantom costs can go up after you buy a house. It's basically limitless. Versus when you rent a place, you know that when you pay your rent, that's your only expense. You know, your rent is not going to go up at least until the lease expires. And even if it does, the landlord cannot raise your rent past what the local market will bear. You know, if you're paying $2,000 a month in rent and the landlord says, I want $2,500, but all the surrounding rentals are also $2,000 or maybe $2,100, they have no shot at getting that $2,500. So they may want to increase it to that, or maybe they even need to because their expenses have gone up so much, but that's not your problem as a renter. That's their problem, and it's their problem that they own a property that's no longer profitable. So in that case, you just move. You also got to think about the other hidden costs of homeownership. Just things like, how much is your heating and electric bill going to be? How much is your gas bill going to be? How much is it going to cost to keep your yard looking like this, guys? I mean, look at this. This yard looks amazing, you know? There's a lot of effort that goes into keeping a yard this manicured and beautiful. I don't know if these people hire somebody or they do it themselves, but one way or another you're paying. You're either paying with your time to keep it looking this nice, or you're paying a gardener to come over and maintain it a couple times a month. So all this stuff adds up. In fact, I recently just did a buyer's remorse video, and one of the main reasons new homeowners have buyer's remorse is because of the fact that they didn't realize how much all this was going to cost. And so if you think about it, this can add up to being roughly an extra $1,500 a month on top of your house payment. And a lot of buyers today, they're really stretching their budget to get into the house that they want to get into. They're, you know, going to 45% debt to income ratios to get into the house already. And then say you're in the house and now you have to pay this extra $1,500 a month that you weren't anticipating. Are you really going to be able to afford that? You know, a lot of cases the answer is no. And that's why you're seeing so many new listings hit the market, because people can't afford it, guys. Yeah, you have some people that bought a while ago and just want to cash out and capitalize on all that equity right now. But if you look at a lot of the listings that are for sale, look, even the one we just saw here, you know, they purchased this house in 2019, right? 5 years later, they're selling the house. They're trying to get an extra $100,000 for it. But I'll bet you it's become harder to afford this house. I gotta say, it's not quite as beautiful as that Louisville neighborhood I walked through in Kentucky, but it's up there. It's pretty nice over here in this spot, and this is gonna be the kind of cool thing for me. I haven't been back to Illinois in 3 years, but one thing I've never done is these type of videos. Last time I was up here, I didn't even make these type of videos, so it's gonna be interesting even for me to walk through all these neighborhoods that I've never even walked through before, even though I grew up here. Here we have another house for sale, literally about a block and a half away from the previous one for only $135,000, but it's a tear down. The inside is completely gutted. Somebody needs to put a lot of work into this house. Then they bought it back in 2002 for $70,500. Still trying to double the price here. property tax is about $4,700 a year, which you can bet will go up when somebody buys this house and improves the value of it, because that's how property taxes work. And that's just one of the extra points I'm trying to make in this video, guys. You can buy a house cheap like this, but once you make improvements to it, the county will reassess you at a higher value because now the house is supposedly worth more, which is another one of those phantom costs of homeownership. Now, if you are somebody that says, you know what, this is all too expensive, Michael, I don't want to take on the risk right now of buying at what could potentially be the peak of the housing market and try to take on all these extra phantom costs, including a mortgage I can barely afford, well, you're in luck, guys. You know, there's a lot of places you can move right now and rent for a fraction of what it would cost to own. And I still think this is the most reasonable and logical move people can make right now, because if you work your finances properly, this can be one of the best decisions you ever made, actually. You know, right now the median rent across the 50 largest US markets as of May is $1,732 a month. And if you think that sounds expensive, it's not, because the average mortgage payment is sitting around $2,500. So almost $1,000 more expensive in the same areas. But here's some of the areas across the country where you can get the best deals on renting right now. I mean, take a look at this. Austin, Texas, the median rent is $1,484 a month, and that has gone down 9.3% year over year, guys. So you could say everything in Austin is crashing, not just the home prices, but the prices to rent as well. Nashville, Tennessee, the median rent has gone down 8.3% year over year. San Antonio, Texas, it's gone down 8.2% at only $1,232 a month to rent over there. Orlando, Florida, $1,670 is the median rent. It's gone down 6.4% year over year. Atlanta, Georgia's gone down by 5.8%. Baltimore's gone down by 5.5%. Charlotte, North Carolina, I was just there, down by 5% year over year. So you're seeing this happen right now in real time, where the rents are coming down. It's so much cheaper to rent. I mean, in Charlotte, we're talking $1,523 a month, guys. I mean, how much was that house that I showed you guys over there? Like $350,000 or something. And I saw a bunch of the comments, people like, oh, I would never buy this house, there's no garage, whatever. What's the mortgage payment on that? Like $2,500, $2,700 a month? Exactly. I just think it makes perfect sense to be looking in these areas where the rents are literally declining because there's so much supply coming on the market, and you can take your pick. And a lot of these areas are very nice, like Charlotte. I would pick that one, guys. Out of all of these places I just mentioned here, that seems to be the most reasonable place to live, and we're talking about cost of living, amenities, low risk of natural disasters, that type of thing. Very nice area. So move to Charlotte. But that's what I don't understand. You know, you see still people pouring into Miami where I live, and yet the place is underwater right now, like literally underwater. You know, there's historic flooding going on throughout the entire city. It's so bad. And guess what? All that does is it increases the cost of living even more, because insurance over there is going to skyrocket. Like, thank God I just paid my car insurance for the next 6 months here in June, but I'm almost willing to bet for sure that in December, when I get the renewal, it's going to go up again because of all these idiots driving on the road. They get their car totaled. Who pays for that?
If that car would move, I would move too.
She says water got inside her car.
My car is stopped there because it's a lot of water.
Miriam Romero had a similar story. She tried to drive through the water, but her car stopped. She found a dry parking lot and waited hours for a rescue.
I tried to go, but no.
We all pay. Everybody in the area pays via higher insurance premiums because there's so many claims and so many morons driving through, 3 feet of water thinking that their car is going to make it through. And then eventually those type of disasters, all these insurance claims that we're going to get down there, those losses spill over into areas like this where they don't have as many natural disasters, but you see your homeowner's insurance rise over here or your car insurance rise over here because they have to make up for all of the losses that happen happened in South Florida, you know? But there's just too much scare tactics out there, and no matter what I say, I think there's just too much fear and too much FOMO that still keeps people buying in today's market, at least people that can't afford it. It's one thing if you can't afford it and you're buying, you're just looking to hedge against inflation because you don't believe the value of the dollar is going to be there. That's a different reason to buy as far as I'm concerned. But a lot of people that try to buy are the ones that just barely can afford it, and that's who I'm talking to here. But, you know, Kevin O'Leary, Mr. Wonderful from Shark Tank, he thinks that home prices will never get cheaper than they are right now. He said this recently on an interview on TV. He thinks because of inflation and the Fed's inability to get us back down to 2%, that's going to be one of the reasons that home prices remain high. But he also says it's just because of the new economy that we're in right now. You know, you have a lot of work from home people that live in more suburban areas than ever before. You also have the migration trends that are not slowing down and pushing up the cost of living in these places that were once affordable. And he thinks that none of that's going to reverse and that home prices are just going to remain this expensive forever. And he could be right, guys. I've heard a lot of people say in my comments that agree with Mr. Wonderful, that they think that's where this can go. But remember, unemployment's already starting to tick up. And there's a lot of people that are barely hanging on by a thread right now doing gig work just to stay afloat who are not filing for unemployment. But as that unemployment number continues to go up, it's almost a guarantee that we're going to see more people defaulting on their mortgage and have to sell their house. It will be forced selling that, in my opinion, is going to drive this housing market moving forward. Okay, you have a lot of people that cannot afford the house payment anymore because of all the expenses we just talked about. And then if people like that, or even ones that are affording it now just fine, lose their job, they will need to sell their house. So there's a lot of different ways we can see inventory come up in the future. The biggest one is the boomer generation that's going to die off and have to sell those houses. So we will see a large amount of housing inventory come online over the next 10 to 15 years. It's not a matter of if, it's just when, okay? And that's why I think we still have a lot of headwinds that are working against the housing market in the long run. For now, as inventory still remains below pre-pandemic levels and unemployment does stay below or around this 4% mark, that's going to be enough to keep things propped up for a little while longer, probably after this election. But we don't know for how much longer. As we see people take on more debt and as we see the delinquencies start to continue to tick up, it's only going to be a matter of time, guys, before more distress starts showing its head in this market. That's my prediction of where I think it's going. Has it taken longer than I anticipated? Absolutely. Do I still think it's going to happen? Absolutely. And you know how I know that people are strapped with cash right now when it comes to real estate and are having a hard time affording their houses? Because we just got a big sign that that's the case this week. Okay, the week ending June 7th, the amount of homeowners that rushed in to refinance their house literally skyrocketed, okay? This is according to the Mortgage Bankers Association. They're saying that the refinance index soared 28% for the week and was up 28% from a year ago. Well, why is that? Because interest rates are at 7% right now, which is still higher than it was a year ago. Why would we see this sudden 28% jump year over year in refinance applications? It's because people are trying to pull the equity out of the house and live off of that money, guys. That's what this big run for refinances is all about. And any person with some level of financial intelligence would not be running out in this economy to borrow against their home and pull equity out of their house and take on a higher level of debt if they didn't need that money to live. Tell me another reason why someone would be doing this right now. And it's only the refinances. That's the other clue we need to look at here. It's only the refinance activity that ticked up 28%. Even though the new purchase applications went up 19% from the prior week, it's still down 12% year over year. So you still have 12% fewer applications at the busy time of the housing market than we had a year ago, okay, but the refinance applications are skyrocketing. What does that tell you? It tells you that people need the money and they're using the house as the piggy bank right now to bridge the gap in hopes that they're going to be able to turn things around. And it's not like we saw a big swing in mortgage rates that, oh, it's not like it went from 7 to 5.5 that pushed everybody down. No. It was at 7.07% according to Mortgage Bankers Association the week before, and then it dropped to 7.02%, and people rushed in to refinance. Give me a break, guys. You're not saving any money refinancing when the rates drop by that insignificant of an amount, okay? It's people pulling money out of the house to pay for the bills. And at this very same time, we have inventory picking up. It's not quite to pre-pandemic levels yet, but inventory across many metros across the country has been picking up. So have the price cuts. So this housing market, just like the economy, is nowhere near as strong as many people think it is. Here's another clue that things are not good with this. The biggest segment of borrowers that rushed in to refinance is who? The VA borrowers. Those are the people that put 0% down. And nothing against veterans of this country, guys. They deserve to put 0% down if they want to, but you know, it's a bad way to get people into a house if they really can't afford it. And unfortunately, that's what this is. You know, you already have hundreds of thousands of delinquent VA borrowers right now that haven't been paying their mortgage for at least a year, and their mortgage servicers are being begged right now not to foreclose on them. And at the same time, they're the same borrowers that are rushing in to refinance their property right now. You think that's a coincidence? I mean, you don't really have to be a genius to see all this, if you ask me, to notice that, hey, maybe there's a connection between the fact that, you know, there's so many VA borrowers that are supposed to be being foreclosed on right now, and at the same time, a bunch of them are desperate to refinance even though the rates barely went down. What do you think that's all about? How many of them you think have rates that are above 7%? You know, the VA and the FHA typically give the best mortgage rates in the business, guys. The government loans always give the lowest interest rates, okay? So they're probably increasing their interest rate to refinance their house just so they can get money to pay the bills a little while longer. And when you combine activity like this with the new 0% down mortgages that United Wholesale Mortgage just rolled out, and already the existing 1% mortgage programs, it's just going to be a matter of time before you see a lot of inventory hit the market from people that just overextended themselves, and it will be a version of 2008 all over again. It might not be as bad as before, but I think you're still going to see, you know, several million people lose their homes over the next couple of years as the financial conditions just worsen. But because this inflation, guys, people cannot keep up with it. The alarm bells are ringing everywhere. It's showing up in the data. It's showing up in the real life examples I give you on the channel. So it's a matter of time before we see more and more inventory and the deals come online. You're gonna see homes get cheaper. Is it gonna go for an all-out crash? I don't know. Previously, I would have said absolutely. Now I would say I'm not sure, but I think there's a high probability that it will with all the weaknesses we're seeing in the economy. So if you enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.